Hey everyone, thank you so much for joining the podcast today. We have Kalpesh Kapadia, CEO and founder of Deserve. Deserve is a credit card as a service. Everything you need to easily launch and a modern credit card program for your business. Kalpesh, thank you so much for joining the show. I'm really excited to dive into your background, your company. So just to jump right in, what were you doing before you started Deserve?
Well, thanks, Julian, for having me on your podcast. So I came here about 28 years ago as a student. I did my master's in engineering and MBA in finance. I came from India, and then I started working on Wall Street from 1998 to 2013. I was working in various capacities on Wall Street, from research analyst covering tech sector to an investor in the technology and software sector. So that was my background.
Yeah, that's super interesting. In working with Wall Street, you said you worked with both analyzing the tech sector as well as investing in certain businesses. What did you learn along the way? Like, what were some key things that you saw as an analyst that maybe have kind of? Is there anything that you predicted that came into fruition today?
Yeah. So I used to follow companies in the wireless sector, in digital media sector, in software sector, in generally in consumer sector, right? And all the mega trends from all the way from 3G to iPhone to cloud, all the trends that I used to follow. And then recommend stocks or buy stocks in companies. Like I was an early investor in Apple, in Qualcomm, in social media companies, even when they were private, like LinkedIn and Facebook.
Oh, wow.
So I kind of understood sort of the power of Web 2.0, the power of mobile and digital. And so that's what I took away from it.
Yeah, did you ever expect social and like LinkedIn and all the other kind of social platforms to be as big as they are today, or is that any surprise?
No, I think these are all sort of platforms for work, platforms for socializing, right? So sort of the Web 2 platforms for content were a big theme. And they're still continuing to be, every 5 years there is a new platform that comes and sort of dominates, if you will, right now. So the zeitgeist is dominated by TikTok.
Right.
And 5 years ago it was Snapchat, and 10 years ago it was Facebook, and LinkedIn has always been this steady Eddie sort of work related platform.
Yeah. Is there any upcoming platforms that you think might start the next wave and influence the next generation, or do you feel like TikTok is hard to replicate now because of the fast content? For me at least, and I'm no analyst, but it's hard to identify any new technology that's kind of going to disrupt either professionally with LinkedIn or TikTok and all the other social channels and umbrella underneath, things like that. But is there anything out there in the market that you think is going to be next?
I think the Web3 is an interesting phenomenon, right?
Yeah.
And the metaverse that is also an interesting universe that is going to, I remember maybe 15 years ago, there was Second Life. That people want to be a Roger Federer in the evening and have an avatar. We are coming full circle. Maybe it was premature for its time or way ahead of its time. Second Life was, and it was like IBM had a store in Second Life at the time. Now 15 years later it's metaverse, right? So it seems I think that's these variables and augmented reality as opposed to virtual reality, I think is a big theme that's going to happen.
Yeah. It seems like everything's kind of lining up to kind of restart Web 2, or restart Web 1, and then go into Web 2 now with Web 3 kind of developing. And it's fascinating how there are so many ways that companies are getting into Web 3 in all the spaces, especially with NFTs and documentation in terms of attaching something to a non-fungible token so that it can be authentic, throughout and throughout. But I'm always so fascinated on whether or not, it's going to be a place for business to happen. And I think the answer is yes. Me and my co-founder were talking about it'd be amazing for us to sit, put on some glasses and feel as though we were sitting in a conference room together and being within a certain space. What do you have any other kind of predictive implications on what Web3 is going to be?
I think that this whole sort of sticking a glass to your head is not the right form factor to enjoy. I think it's more natural form factors are going to be the ones that, because you can get, all sorts of headaches and, mental issues, physical issues by being in front of a screen all day long, right?
Yeah.
So AR and sort of feeling natural in terms of 3D communication, and AR will be a more natural to feel, if you will, if you want to be in the metaverse. I mean, if you look at the graphics also that you have in metaverse is nothing compared to video games, right?
Yeah,
you have amazing real life type graphics. So a lot of these things will have to. I think one of the quotes that I love from Jobs was that you don't want to be hitting the market before it's ready. Palm Pilot was like a big product in the 90s.
Yeah.
Everyone I knew had a Palm Pilot, and it was probably 10 years ahead because the screen resolution had not caught up, the memory, the storage, the multi-touch, and then iPhone was launched 10 years later, and it became a huge success, right? So you don't want to hit the market too early, and I believe some of these things are probably 3 years, 5 years too early.
Really? Well, are you a Neuralink guy? Are you? Yeah.
I do believe in that. So.
Yeah. No, it's funny to kind of hold back like the fear and skepticism for technology like that. But it seems as though humans and technology are integrating in so many different ways that it seems that it has no direction but to go in that way, where it's going to be completely integrated in our day-to-day lives like that. But switching,
it's the interface, right? It's as Elon mentions. Singularity is near, and now singularity is here. In 5 years, it's the interface, the I/O, right, from brain to your fingertips to how quickly you can type, how quickly you can speak versus absorb information. So it's the interface issue, it's the I/O issue.
No, that it's so fascinating with where things are going to go and how they're going to be integrated. That it's going to be. Obviously, Neuralink is in its conception and maybe too early as well, but yeah, it seems to be all heading in that direction. But switching gears here to talk a little bit more about Deserve, because that's why we brought you on to go dive into the startup a little bit more. What inspired you to start Deserve? At its conception.
Yeah, so the genesis of the company were in my own personal experience. As a student, and many of my family members and friends and people who are near and dear to my heart have experienced. So it was, so what I call a founder product fit. So I had come here as a student, and I had trouble getting access to financial products, including loans and credit cards, because you lack, when you arrive, two key elements which are required by U.S. financial system. One is your social security number, and other is your credit score. And we thought that this was unfair. People who come here from 10,000 miles away to make their lives better, just because they lack these two numbers, they should not be disadvantaged or underserved, if you will. And that was sort of the founding of the company. We built the algorithm and workflow management for underwriting credit without the use of social security number and credit scores, which people thought was not possible, when we started. And we built from there. So if you look at the top 4 software companies in the world today, the CEOs of those companies, Microsoft, Google, IBM, and Adobe, they all came here as a student from India. And imagine acquiring these customers early on in their life cycle, in their journey.
Yeah, yeah.
and the lifetime value would be tremendous for these customers, right? So this is what we were pitching to the banks, and everyone thought it was a no-brainer, but people didn't want to be the first to do it.
Right. Yeah.
So you have the arrows on your back when you're a pioneer, right? So we decided we're gonna launch a credit card, and we're gonna give credit card to this deserving but underserved population, and that's how we started the company.
Yeah,
and over time we've sort of evolved that problem to include, as a software stack. We kept building and going one layer below in terms of the layers of the cake, if you will. And now we are at the layer which is very close to the base layer, which is your Visa and MasterCard layer.
Yeah. What
So we built everything from there.
Yeah, and maybe I misunderstood this, but so Deserve kind of focuses more on the underserved community that comes from.
That's how we started.
That's how we started. Okay.
Not where we are. Where we are today is we are the most modern credit card as a service platform.
Yeah.
More modern than even Apple Card today.
Wow.
So we can, Apple Card is only available on iPhone, and Apple Card is only available on MasterCard.
Yeah.
We are available on both Visa and MasterCard, and both on iPhone and Android.
Wow. What kind of causes a business? And one thing when I was looking into Deserve, why would a business need a credit card, and what are the uses that kind of help accelerate its accessibility to different funds?
So I think this is a B2B2C. So think of it as a large brand that wants to serve. If you look at credit card, is the best fintech product that was ever invented.
Yeah.
It served three distinct purposes. It is used as a form of payment, and as a form of payment, it is better than debit card and better than cash. And debit cards, money goes straight out of your account, and your card is floating around in the ether where your bank account is exposed, if you will. So it's not very secure. It doesn't have inbuilt fraud protection, unlike credit card. So if you were to buy a ticket from an airline and use your credit card, or debit card rather, during COVID, like 5 different airlines went bankrupt around the world. And if you bought a ticket through your debit card, good luck getting a refund.
Yeah.
Right. If you use your credit card, you just say, hey, I'm not paying this. I didn't get the ticket, or I couldn't fly on this airline, right? So the bank will fight it on your behalf. The second use, and then it allows you to build credit history. Debit cards don't. The second use case is probably more powerful use case is your rewards. When you attach a credit card to a brand, the propensity of spending goes up by up to 30%. So think of it as if you are going to Costco and use your Costco credit card, you're likely to spend 30% more than you would use other cards. Same thing for Apple, same thing for Amazon. So very large brands love credit card as a loyalty tool, and consumers love their reward. And the third leg of this tool is lending. You can borrow. It's still the easiest way to borrow money for consumer, no questions asked. You could get a $10,000 credit card and go to Hawaii. Nobody's going to ask you why you're using this money, for what you're using this money, right? And banks can give instant credit to their customers with just 4 or 5 questions, right? Name, date of birth, Social Security, FICO score, right? And then you give the card, income and assets. So that's sort of the trifecta of use cases: payments, rewards, and lending under one. And what we are doing is we are modernizing the entire stack with digital and the mobile experience up front.
Yeah.
In the middle, you have your APIs and SDKs. In the back end, you have a cloud infrastructure. So that's the stack that we built. And your question was around why would businesses need? Businesses are banks that we target, the fintech companies, the brands, right? So those are the verticals that, hey, if you have a very attractive audience, if you think of it as, a luxury brand like Louis Vuitton, right?
Yeah.
If you have a one item cost an average $3,000, I'm just making it up.
Sure.
Now, if you give a luxury premium credit card to go with that, right? If you're shopping at Louis Vuitton, right? So you can think of all the possibilities that come with that. You can buy a big expensive piece of luggage and you can pay it off over 12 months or 18 months, right? You can use rewards to fund your purchases at Louis Vuitton. You can use the card somewhere else. And you can, so there's brands like Costco, Amazon, Apple. Everybody has it. Airlines have a credit card. Hotels have a credit card, right? So retailers have a credit card, right? So that's what we serve. So we allow you to launch cards faster than any other bank. We allow you to scale them better because it's a digital experience. It scales at a lower cost than your sort of a old school. If you think about how they used to give you credit card at Macy's or Banana Republic, right? You go out at the checkout cashier as a register, and you have a bunch of clothes in your bag, and they're like, "Oh, Julian, do you want to apply for Macy's card today? All your purchases is 15% off." Now, how do you intercept a customer in a digital realm, right? At the point of purchase. So we come in, we offer this highly digital solution, which is deeply embedded in your product stack. So that's what we do.
Obviously you hit a few points that hit close to home, because I can't tell you how many times I've been asked in a department store if I wanted to sign up for a credit card, and that's when like you said, they intercept the customer in that way. Is it similar experience if I'm shopping online when I get intercepted by this potential chance to like have a credit card under a certain brand? Is it at checkout? Where do you capture the customer in the digital experience?
At the checkout, right? So you could get, like, I think Southwest Airlines has it, or some other airlines have it, where you are buying a ticket and they will say, "Hey, put it on your Southwest card, and get $200 off," right? So at the checkout, you do it. So we would enable that kind of experience for our partners.
It's the interesting piece about loyalty. Obviously there is the huge component, because I always think about, like, with my credit card, I'm always looking for rewards and different benefits. And I guess I didn't really see how its influence on loyalty is for that brand. Do you feel like, having that opportunity to use that brand and that credit card that's under the brand to purchase other things outside of it increases customers returning, to that specific brand, whether it's Louis Vuitton, which, $3,000 average purchase seems like you're fairly familiar with Louis Vuitton than you may be telling. But, in what ways, I guess, have you seen like the increase in loyalty in consumers with the brands that they like and the credit cards that they get?
So I know a lot of people have Amazon credit card. What they do is they would use it every day and they will accumulate points, and then they would just use to buy stuff from Amazon using those points, right? So how you earn reward and how you redeem reward. So if you have a certain loyalty to a brand, and if you're going to earn rewards automatically on everyday daily purchases, and then you can redeem them, right? Same thing goes for airline, right? You spend that, you use that card all year long, and you spend a lot of money on this card, and then you have 100,000 miles, and then you can say, okay, me and my friend go to Hawaii, and I click the button and I redeem that, right? It's a very, very powerful experience.
It's so fascinating. I feel like, for at least my generation, it's been interesting to see kind of the evolution of credit cards as something where it's like, giving you more access to more possibility, but also becoming maybe a tool to get under a certain amount of debt, and kind of people are a little bit more cautious in accessing that and using that as a part of their purchasing experience. Do you have any rules for the average consumer on ways to manage their purchasing and credit cards? Like you said, if they increase their purchasing by 30%, obviously, there's a counterbalance to that. Just curious if you had any kind of tips or rules around credit cards and how to manage them so that you can best utilize their points, benefits, and their purchasing power.
So we can power digital experiences whereby you can set limits per day. You can set limits per merchant. You can send limit per location. that this
Yeah.
card, I will only buy 10 cups of coffee this month from Starbucks, which is about $50, right?
Right. Right.
So I will only spend $50 at Starbucks, right, this month.
Yeah.
If I go over $50, card shouldn't work.
Yeah. Yeah.
So you can set controls on the card.
Yeah.
That is possible at the merchant level, at the category level, that I'm only going to spend, $800 on grocery this month.
Sure. Sure.
I'm not going to go and buy that extra, wine bottle or cheese or something.
Is that part of the?
So you can do that. You can also do credit scores, right?
Yeah,
So we
yeah,
give
yeah.
free credit score and what goes into your credit score. So it gives you visibility into, hey, if I utilize the card 90% or 100%, my score will go down. If I keep my utilization to 20 or 30%,
Yeah.
my score will be healthy.
Yeah. Yeah.
So giving that feedback to consumer is important.
Yeah.
Like,
Is that done all through the Deserve platform, or do you partner with merchants kind of like as a white label service to add that in their experience?
We provide this standard out-of-the-box solution
Yeah.
for you to create controls by merchant, controls by category,
Yeah.
budgeting tools, certain budgeting tools we give out of the box.
Yeah. No, that's
Credit score visibility out of the box.
Yeah. Well, tell me a little bit more about the traction. And you mentioned you're working with banks and financial institutions. And is the current expansion into brands and seeing where that goes, or where's the current direction of the company going right now?
Yeah, so we want to have as many cards accounts under management, as many partnerships as possible. And the categories we have for partnering with banks, fintech companies, brands, and crypto companies, right? And also we have a new card that we are launching for small businesses.
Oh, wow.
So those are the sort of the target verticals, if you will. And what we bring is the end-to-end experience that is second to none. We have a number of different ways to underwrite customer. Underwrite using traditional metrics such as a FICO score, income, assets. We also can connect through Plaid to your bank account to see ins and outs of your bank account, saying, okay, Julian is getting some regular deposit from some employer, so he probably is employed. This is how much money he makes, right? We also have payroll direct connect through companies like Pinwheel and others, where we would bring these integrations where you can underwrite more people, so we can increase the approval rate. Then we have the various ways to earn rewards and redeem rewards.
Yeah.
So one of our partner, you can redeem rewards in Bitcoin. So 1.5% in Bitcoin, right? So whatever you spend, you can earn Bitcoin. Another partner, M1. So this is BlockFi. Another partner is M1, where you own a stock in a company. Let's say you own 10 stocks at Tesla or Whole Foods, which is now Amazon, Disney, Starbucks, Marriott. And then if you shop at these merchants, you get 5, 10, 2.5%, different percentages in stock.
Wow.
So you can automatically get stock in this merchants.
Wow.
Right?
Yeah.
So I pay my Tesla insurance, and I have a Tesla stock, and I get
it gets refunded right back into it. Yeah. Wow, that's I didn't.
It's pretty interesting.
Yeah. It's interesting.
Another partner of ours is Truebill, where you can manage your subscription. So let's say you were on a flight and you sign up for GoGo Air for $10 for a flight on internet.
Right.
And you forgot to cancel, and then next month they charge you again $10, and then again $10. So I've been scammed by eFax. eFax. One time I sent a fax using eFax, and for like 6 months they kept charging me. So if you put that subscription on the card, it's only one time. The card will not work again.
Wow.
With that merchant, right?
So
interesting use cases that we are powering. So a lot of traction. We have 20 different partners that we work with. We are adding new partners every month.
Yeah.
We're launching new cards every month.
Yeah.
So yeah, that's been the story.
Yeah, that's incredible. I love the idea of, purchasing into a business as well as, getting it, the stocks back into that business. It's almost like loyalty on a different level, because now you're even more incentivized to see the success of that company. And I think a lot of times we feel, and I'm not sure if this is going to influence it, with what you're doing, but it seems as though we detract on feedback. We don't give as much feedback as we should on products that we use regularly, because we feel that they kind of have the onus in providing something that is hopefully serves all of the purposes that we want it to. But with consumer reports and different review sites, I think that's like a little bit of the pie in terms of helping the company, or pushing the company to increase the efficacy of their product. But it seems as though if you partner with the company and buy back the stocks, you even have more of an incentive to make sure that product is going to be like continually successful and better and better. Do you see that as a result of loyalty programs like the one you have for Tesla? Say if you buy your Tesla insurance and you buy back into the stock, is that going to lead into consumers having more of a say into certain companies improving their products?
Yeah, no, I think so. I think having that voting with your dollars is very powerful, right?
Yeah.
So more and more people are making a statement with their wallet.
Yeah. Yeah.
So you can write a review, and I have a theory that people only write reviews when they have a bad experience.
Yeah.
They don't write reviews if you have a good experience, right?
Yeah, yeah. You typically have to be asked to write a good review. At least with most companies that I talk with. But what are some of the risks that you're facing right now within your company or within the market that you're serving?
I think that risk, I would say, is the timing of things, right, as opposed to the size of the opportunity.
Yeah.
Yes, there is the economy that is probably going through recession right now, so it's not unique to Deserve. It's everyone is facing that, right?
Right.
In some form or shape, right? Consumers are actually using credit cards more because gas is costing you $5 a gallon now.
Yeah.
Right. Inflation is 9%.
Right.
So we don't see demand decreasing for our product, right? It's just that modernizing a age-old industry, which is kind of stuck in the Kodak era.
Yeah.
It takes time to, to be the Instagram. We are the Instagram of the Kodak generation,
Yeah.
So a lot of banks are invested heavily in the legacy infrastructure like COBOL and mainframe.
Right. Yeah.
To convince them, it takes time.
Right.
And sort of it's an inertia that you're fighting.
Yeah.
So it's not about something that is existential. It's just more of a patience and fighting the inertia.
Yeah. Yeah. I know you touched on it earlier with the partnerships that you're building, the different brands that you're adding on to, and just increasing that. I would say increasing your product over different companies. But what's the long-term vision for Deserve? Is it going and involving Web3? Is it going into a different sector? What's your long-term vision for Deserve?
When you look at money, right? Money used to be paper money in the 1960s, 70s. Then it became plastic, right?
Right.
With credit cards. Now it's moving to smartphones and more your digital wallets, right? And then money is becoming a piece of code. So there's a 100-year transformation of money from using cash to moving to code, from cash to code.
Yeah.
And that's the vision for the company. We want to power the transformation of money from cash to code. And during COVID, it got accelerated where many merchants were not accepting cash.
Yeah.
It's a touchless payment and digital payment. So the more we move in that direction, the more the limitations of the legacy infrastructures are going to be exposed.
Yeah.
And we want to be the modern cutting edge infrastructure to transform money into a piece of code.
Yeah.
That's a long-term vision.
I love that. Yeah, I was going to touch on the digital wallet. It feels like, when you talk about giving accessibility to small businesses, the digital wallet is going to be that much more important, in terms of carrying around a lot of plastic that, it just kind of gets lost or shuffled around. The digital wallet, having that Apple Wallet or Google Wallet or whatever you might use, I feel like it just increases the opportunity for a lot of businesses to have a stake in the game that previously they might not have had in the past. Yeah. Well, awesome. I always like to ask a bonus question for our founders and our guests to kind of give me a little bit of research to do on the side, but also to help our audience kind of dive into other resources that might influence them. But what books or people have influenced you the most?
I think I like to read biographies.
Mm-hmm.
So I've read biographies. Walter Isaacson wrote Titan. There was Ron Chen, Rockefeller, Benjamin Franklin, Steve Jobs, Elon Musk biography. I read The Quest for Fantastic Future.
Yeah.
Jeff Bezos biography I read was Everything Store. Those are very inspiring biographies.
Mm-hmm.
Then I read sort of self-help books as well, right?
Yeah.
Art of Thinking Clearly by Rolf Dabelli.
Yeah.
Also, Ben Horowitz's recent book, which I read, was What You Do Is Who You Are. And then the last one I read was a Code Breaker about the mRNA revolution, the vaccine revolution.
Yeah.
It was Walter Isaacson wrote it about Jennifer Doudna, who won the Nobel Prize for vaccine invention. So.
Yeah. What do you?
Those are some of the books I like to read.
Yeah. What do you what is your main? Do you dive into a book knowing what you're going to take away from it, or do you kind of let the experience kind of elicit some kind of, I guess, epiphany or a thought that helps lead you to the next thing? I'm always curious on how people approach reading.
So I'm into nonfiction, right,
Mm-hmm.
and biographies, and this is something that you sort of see the success, and you celebrate the success of people, but all the hard work, all the patience and perseverance that goes into building large companies or doing anything worthwhile. I just like to read the stories behind it.
Yeah.
Right?
Yeah.
So,
yeah. I was
it's very inspiring.
Yeah, I was reading the I think it was called The Four, but it was talking about Facebook, Netflix, Amazon.
Scott Galloway's book, right?
Yeah, exactly. And so fascinating how the ideas came about and the timing of the market. I think timing, like you mentioned, is huge. But yeah, those stories definitely inspire a lot of ways to think, for me at least, in a new direction, or kind of take me away from the present and help me kind of extrapolate some kind of strategy or thought that helps me see kind of things holistically rather than getting stuck in a box, I would say. Yeah.
Yep.
Awesome. All right, Kalpesh, thank you so much for joining the show. I really appreciate all the insight and the knowledge that you shared, and how you kind of think of money and the way it is transforming. Tell us a little bit before we jump off here. Where can we find you? Where can we support Deserve? Where can we just follow its journey throughout its revolution in creating money from paper to completely digital? Where can we find you?
Yeah, deserve.com is our website. It's easy to remember.
Yeah.
Deserve Cards, at Deserve Cards on Twitter and Instagram, on LinkedIn. So you can follow us on all these channels.
Perfect.
On Facebook. It's interesting now, people don't talk about Facebook as much.
Yeah.
Yeah.
Everything's moving to TikTok now.
For me. Or Instagram, right?
Yeah,
Instagram is owned by Facebook. So.
Yeah.
But yeah, it's like it's a the demographic of Facebook is maybe in the I don't know who uses. Last time I logged into Facebook, I don't know.
Yeah. It's distinct now. It's like boomers and millennials are moving to Instagram, and then more of the Gen Z audience is on TikTok. And you kind of if interesting social experiment for you to do at home is just look into the comment section of both, and you can kind of see and you can kind of tell who is what demographic is in those different platforms. It's actually kind of fun on a weeknight if you catch some time. But Kalpesh, thank you so much for joining the show. I really appreciate it. And we'll blast these on all channels. But overall, man, thank you so much for joining. I appreciate it.
Thank you. Thanks, Julian.
You're welcome.